Good morning, everyone, and welcome to the European crossover webinar. And we have seen the equities finally going and pare back a bit. And just bear with me. Just updating a couple things. I had my electricity go out for a few hours yesterday and finally came up and took a while to bring some things up. But we did go on and see a pretty good little sell-off later in the day, and actually had noted, if you were following closely to the Dow futures, that's where we were seeing this bigger change here, or where you saw where the market was essentially running out of gas. And bear with me. Somebody had put in the wrong dates here, and I was just trying to correct that. So you can see here where we went and paired back. I mean, we had held on throughout the day, but when you look here on the Dow futures, the Dow futures were having the tougher time throughout the day as the market continued to go on and weaken. And the S&Ps were still holding up rather well, as was the NASDAQ. We were seeing a bit of a rotation where actually the NASDAQ had been underperforming actually throughout the week. And we finally at that time, we finally saw that the changes take place. And bear with me, still trying to update something here. Somebody put in the wrong dates and threw me off. I'm going to add into the error here. I was thinking that is not the correct date. Somebody doesn't know how to tell time or something. Hang on. I swear. But we did go on and see this market finally break lower, and finally very late in the day, you can see we finally generated a sell signal. I was talking about that. I had mentioned the chat room because we came pretty close right in here. And I said, hey, look, if we get a lower close, we can potentially move lower. And when the Dow futures kind of popped up a little bit, it allowed the S&Ps to kind of stay above this 36 area. But as we started to rotate just a bit lower, then we saw the S&Ps weaken, and then we really saw this market come under pressure late in the Rick was asking about the power. Yeah, it was we've actually had pretty good strong rains, or pretty decent rains over the last 3 days off and on, and then it gets real sunny. And yesterday it started out real windy, and the rain wasn't that heavy at all, but the power went off, and usually it'll come back on within about maybe 15 minutes, maybe 30, and this lasted for about 2.5 hours, maybe a little bit longer. I mean, to the point that even my uninterruptible battery supply boxes, they even went dead. They were beeping until finally they used up all their energy, and I was thinking, boy, this thing's really going to be without energy. But anyway, we finally got went and saw this market pull back, and then we saw a snapback. And actually, I was able to catch some of the snapback on the way to put on positions on the way back up. And then I used the dip back down here to get out. And then I think I got one more like in here, and ended up going to sleep. But I guess I should have kept. I could have added back on here. I didn't see this up in here, but I don't like to carry positions over the weekend, so I wasn't sure if we jump back up in this range, because what we have seen happen, we've talked about that, is that on these pairbacks, probably you can see it more closer here, like on the 2-hour charts and daily, we were saying just that the those have been looking at the longer term charts, whether it be 2/4 hours and into the daily, because they buy this thing and send it right back up. And I thought, well, even if we've come down here and we pop back up in here, you can see here we even had a on the 2-hour. Nice pop back on the close. Well, actually right here, and then we saw this pop back. I go, this thing could come right back up at 30.40. And so I think I'd rather than just come into the day. And I know that Trump's having his presser regarding China, and that's going to put some more concerns. But we have really turned things lower here, really across the board. Probably easier way is going to look at the 2-hour chart. And at the time when we were still holding up here in the afternoon with S&Ps, we had already come up here to the 88% here on the NASDAQ. So, and then the Russell had been weak all day long. You can see here, had really, and then it started to kind of push a little bit further, but it hadn't had that much an effect on the NASDAQ or the SPOOs. But once the Dow future started turning, that's what we were following. That's what the market was following, or at least the S&Ps were following on here. So we finally saw this thing weaken a bit, and hence we went and broke a little bit lower. We'll go and take a look at the calendar. Bear with me one moment. So we come into today at the top of this next hour. We did have a Eurozone money growth, but at the top of this next hour, we'll have CPI, Italian CPI, followed by Eurozone HICP flash. And then as we come to the States, we will have, which potentially could have a pretty good little impact, personal income and spending, core PCE, as well as advanced goods trade balance and wholesale inventories. So quite a bit of data that will be out here at 8:30 Eastern. And then, of course, we do have Canadian GDP, producer prices, and then we do have Shy PMI at 9:45 Eastern. And then we do have University of Michigan, but those are final figures. So I don't expect them to have that much of an impact. And we do have Canadian budget balance. That'll be at actually 11 a.m. Eastern. Well, a little bit of a bevy of data as we come in, but we are certainly continuing to weaken here. And the SPOOs. We've come so far, we're definitely stretched here. With me. Glasses cleaned. But we've had such a phenomenal run, and this market has just been unwilling to give up its gains, and we've pretty much gotten as much positive movement out of what's been out there as I would think possible. I don't see what the catalyst would be that could propel us any higher. And yesterday, from 2 days prior here, it looked like it was over and done with. And we came all the way back, and I think we knocked out some people. I myself had, when we had short up in here, I thought this was it when we fell back here. And then I'll be doggone if we didn't make another move. And then I thought as the day went by, I go, what a better time than to have knocked everybody out at this point. And that's why I took a few little minor scalps stabs up in here. But as we started to break lower, I kept my eyes focused on that YM, and that really was a telltale, the YM here, as to this market kind of reaching its, some you maybe say its zenith. But you can see here, and when we came up here, I thought, well, I wouldn't necessarily say, in retrospect, you can say it was a bit of a hanging man, but the wick wasn't that long. But I kept looking back here, and it just looked like this market just couldn't push any higher. And it had actually been the leader all week long. So I thought, we're very susceptible. The S&Ps were still trying to push higher, but they were paying attention to what was happening on the Dow futures. And, of course, the NASDAQ was doing its own thing as there was a rotation here. And then finally we saw this thing really start to break it. Like as I mentioned, the Russell was weaker, but the market hadn't really paid that much attention to it. overall. I mean, actually late in the day, it was actually even breaking harder than the Dow futures. And still the Dow futures were kind of like they're just kind of starting to gather just a little bit of movement. And it wasn't until the Dow futures, as I said, started to really turn much slower. And I said, look, if we get below 25,500, that is not only going to take out support, it's also going to flip this to a sell mode. And if you look on here, we had been in a buy mode. Pull this back. Look at that. Since May the 24th, we've been in a buy mode throughout this whole period. So once we got that turn, that really shifted the momentum low. Although they came back pretty well in the as we were going into the closing bell, they came up and popped up. I think they closed at around 30.35 or 30.34. So they really had a pretty good little move up here before we finally, started coming down. But there we have it. We'll go into the news. So the yen perks up and the dollar sags as markets jittery before Trump speaks on China. The yen rose against major currencies on Friday as caution ahead of Trump's press conference on China's treatment of Hong Kong triggered safe haven inflows. The dollar drifted lower against the euro and the British pound, but could quickly reverse course amid growing concerns about the tense relations between the world's two biggest economies. The focus shifts to Trump's response to China's passage of a national security law for Hong Kong, which could ignite a diplomatic row between Washington and Beijing. I mean, some people would say, and I can see where they could almost say this, that the market's ignored it, but I really don't believe it's outright ignored it. But yes, we've seen dips, and then the market would just come right back up. But it having a greater weight today, but I think really it's more about momentum has shifted also. The greenback was on course for a weekly loss against major currencies as progress in lifting coronavirus lockdowns and stimulus plans in Europe weakened demand for safe havens, but the mood could quickly worsen if Sino-US tensions increase. At the moment, hopes for economic recovery is strong, but I expect this to gradually fade to increased concern about the U.S.-China relationship, said Minoru Uchida, head of global research at MUFG. What happened? There'll be more risk-off trades, which supports buying of the dollar and the yen. The dollar fell to 11.02 per euro on Friday and close to its lowest below since March 20th. The euro drew support from data showing smaller than expected fall in German and retail sales. Common currency was headed for a second weekly gain against the greenback as the EU announcement of a $750 billion euro krona recovery virus fund fueled optimism about the Eurozone economy. The dollar last bought 96.27 Swiss francs. The Aussie fetched 66.56, close to its highest in more than 2 months, while the Kiwi traded 62.14, near its strongest since March. The Aussie and Kiwi were on course for weekly gains as investors cheered the gradual reopening of business activity in the two antipodine economies. China's parliament on Thursday approved national security legislation for Hong Kong that Western countries fear could erode the city's freedom. Trump, who has vowed the tough U.S. response, told reporters he would have a news conference on China on Friday. The risk is Hong Kong could lose some of the special privileges it enjoys under U.S. law, which would threaten its status as a global financial hub. The potential standoff stirred memories of last year's bruising Sino-U.S. trade war, which weighed on the global economy and roiled financial markets. In the onshore yen, it had held steady at 7.1463 against the dollar. This week, the euro led the charge against a weakened dollar after EU policymakers unveiled fiscal stimulus combining grants and loans intended to ease dissent among the Eurozone countries. Analysts say the euro struggled to extend its gains because fiscally conservative member states may still push to alter the plan. Elsewhere, the pound rose to 23.50. Sterling was on course for a second weekly gain, supported by broad selling in the dollar this week. However, sentiment for the pound has been somewhat negative due to the calls for resignation and an influential aide of Boris Johnson's lack of progress to the EU talks and speculation about negative short-term interest rates. And let's see here. Aussie and Kiwi dollars hold weekly gains and worry of Trump. The Aussie and Kiwi dollars were headed for solid weekly gains on Friday as countries across the globe restarted their economies. Trump is to give a conference on punishing China over its Hong Kong. Anything that threatens to aggravate the two countries' trade dispute would likely be taken as negative for the antipodian currencies. For now, the Aussie, after backing away from a 11-month high of 66.75 that left it 1.6 firmer for the week, but facing stiff resistance at the 200-day moving average, which is at 66.58. The Kiwi was a fraction softer and off a 10-week peak at 62.32 or 62.32. They also had a good week on the yen with a rise and having briefly touched its highest since February at 71.92. Jack Chambers, rate strategist at ANZ, noted that the Japanese investors have hedged their currency exposures. The premium offered by Australian 10-year bonds over domestic debt was the fattest in almost 2 years at 30 basis points. This may spur an increase in offshore demand, particularly with there being certainty about the stability of the Aussie funding condition, he said. Last week, the Aussie government said it would spend 60 billion on a job retention program than the first budgeted, and likely cut its borrowing plans needed for stimulus plans. The RBA also held out hope that the economic downturn would not be as severe as first feared, given success in curbing the coronavirus. And lastly, let's see if I was going to see if we had the morning bid, which really has not been much of anything. But I wanted to see if that was out. Although we've pretty much touched on just one last thing. Global stock indexes fell, and safe havens such as bonds and Japanese yen gained on Friday's investors awaited Washington's response. European stocks opened lower. Pan-European stock 600 down 0.86 tenths. The German DAX fell 1.2, and Britain's FTSE by 7. I know that's not right. By 7%. That's incorrect. Might mean 0.7 tenths percent. Early in Asia, the broadest index, the Asia Pacific shares outside Japan fell 2 tenths. Japan's Nikkei retreated from 3-month high, and the yen rose to 706 against the dollar. The question is, how far will Trump go at today's press conference after removing Hong Kong's favorite status would probably spark negative market developments, hitting both global risk sentiments, which could backfire on the U.S. economy as it would further deteriorate the relationship with China. Hong Kong's government warned on Friday that withdrawing its special U.S. status, which has underpinned its finance hub, could be a double-edged sword, and urged the U.S. to stop interfering in its internal affairs. Hong Kong's Hang Seng was 8 tenths lower and has lost about 3% in the last 2 weeks. Despite the gathering tension, the near daily release from the grim economic data, enormous global stimulus to have propped up stocks. And like I said, this S&P has just been nuts to the extent that we've moved. To me, I think it's just been excessive. They've priced in way beyond perfection. So we can certainly see us, start to give in starting this next week. We'll see, because if Trump isn't as negative, you could see the S&Ps bounce back. But I think we've pretty much stretched this thing as far as we can go. So with that, we're just going to move into the analysis. So looking at the euro had another solid close on Thursday, taking out 1050. Resistance will be 1095, which we've actually been in the eclipse there right now. You can see the 1095 here. With support at 1020. So we're going to stick with the 1095. We did pop our heads above 11. So bear with me. So I think also we have to go in and switch this now to bullish, only because we've had, and it's not two consecutive closes, but we have finally, we've taken out this high here. Okay, so we took that, there's one close here and two closes. So I think we do have to switch this to bullish. I think we are overstretched though. We can see this come back down, but at this point it's come quite a ways, and support, as I mentioned, is going to be 1020. Let's go move on to cable. Okay, so cable closed above the 123 area on Thursday, allowing for some follow through. Resistance will be 2387 with support at 2240. So bear with me. And let's go move into the Aussie dollar. Well, we're still holding up pretty well up here in the Aussie. So the Aussie closed within a tight range for Thursday. Resistance is going to be 66.80, which we've come pretty close. I mean, right in here, but we're supported going to be at 65.69. So one moment. Up to 66.80. And we did dip this down though to 65.69. These two have held up really well, the Aussie and the Kiwi. But of course, I'd say things have come around a lot better with the Aussie, and also it appears that they may end up requiring less lending than was expected. So that's kept the bid up in here. I'm a bit surprised we haven't pulled back at least a little bit. Moving on to the Kiwi. No changes here in the Kiwi. We're just dead in the water right here. So no changes. If we pull up our bias chart support from yesterday, resistance is going to be 62.05 with support of 61.28. But we're just dead in the water right here. No changes. Let's go and move on to the dollar CAD. Well, no changes here in the dollar CAD either. You can see that we're just nothing's going on there. We're just stuck down here at this lower range. I'm surprised we haven't seen at least, even if we saw maybe a bit of a snapback, but of course the dollar was under pressure. So looking at the dollar CAD, it's going to remain the same here, which is going to be 37.08 in case we break lower, with resistance at 38.77. Certainly bearish at this point. Now let's move into the dollar peso. And really no changes here in the peso. You can see where we're continuing to stay floundering at these lower levels within, once again, a very tight range. Support's going to be 21.89 with resistance at 22.50. So no changes from yesterday on the bias chart. 21.89, 22.50, and of course we moved into a bearish mode. Looking at the dollar yen, we did kind of move lower here, and it says the dollar yen pushed lower on Thursday, allowing for a test of the 7 area. Support's going to be 692 with resistance at 778, and that 778 doesn't look like it's in any chance of this thing getting hit. But it's going to be 778, so let's pull this here. And it's kind of a little bit of a telltale in that, remember, look at the rallies we've been seeing in the equity indexes, and the dollar yen wouldn't even move. So as soon as they ran into a little bit of trouble, it quickly dipped. So 692 for today, and resistance will be 778. So the dollar index sold off on Thursday, taking out 98.50. Support on Friday will be 98.09 with resistance at 98.80. So 98.09. And resistance 98.80. Now, I'm not going to switch this to bearish yet because a couple of reasons. It hasn't broken down that far. We did get these 2 days pushing lower, okay, here. But you can see here it was still within, almost if you want to call it neutral. But also, if Trump does impose whatever on Hong Kong, we could see this thing snap right back up. So I'm going to leave it with that bullish mode here. With that, that's going to wrap up for the major. So we'll move on to the cross rates. Well, we did see this just pare back just a bit on the Kiwi yen, but of course we do have the yen strengthening, fighting with a bit of safe haven concerns here. So it's not odd that it would pare back. It hasn't even pared back much because once again, you know that the Antipodean currencies have been strong to start with, so it hasn't pared back much at all. But support, I think we need to move just a bit under the 66.39. So we're going to go with support at 66.18. And resistance, I'm just going to go right there on this high from that date, which is 66.98. Not taking much off. And this has to be moved towards bullish because it has held up rather well. Let's go to the euro yen. See a pretty good move here, obviously on the backdrop of the strength in the euro overall. But this may be a bit restrained because of the yen here. So we're going to go straight up with the technical level, which is going to be 1925 on the high side. And on the lower end, I wouldn't expect it to sell off too much, but we'll go with this high, which is going to be 1853. And move on to the euro wad. Oh, this has picked up just a bit. I'm not going to see any changes on this. It's going to stay the same. 67.63 with support of 65.40. No change. And let's just go move on to the euro QE. We have seen this thing advance a little bit further. And we'll give it just a little bit more room for today. Actually, we'll just go with this high right there, which is actually 79.40. And support's going to be this close right in here and into this open right there, which is going to be 77.84. And onto the Aussie. I think this has kind of run its course at this point. Let's just go with that high. You see, the whole we have been able to, from a closing standpoint, we're going to just use that as a high, which is going to be 71.51. We have 52, that's fine. And support we had was 70.46, and we'll stay with that also, 70.46. So that's going to stay the same for the Aussie. And then moving on to the Guppy. Wow, look at this. I mean, just no movement. So this is going to remain the same too. 32.75, 31.51, no changes here. Look at that. I mean, this is 3 days of just almost no movement. And we'll wrap it up with the sterling odd. This thing continues to remain weak. And just going with this big technical level here, which is 84.31. We had 33. Right there. It's 31 actually. So let's move it 2 pips lower. And resistance we had for 86.04. The high yesterday or this morning so far has been 86.31. We'll keep that there, 86.04. So that's going to wrap it up for FX. And moving back into equities. This is really your key area here for SPOOs. It's going to be right here. Doggone it. Okay. Right there. 2-hour close. As long as you don't get a 2-hour close above 30.38. It's 37.25. Right there, that little hair right there. See that? That's 30.38. So you could go. As long as you don't get a 2-hour close above 30.38. The only thing is, I don't know what time the press conference is, and of course, I myself don't like to hold anything over the weekend. I don't want that kind of risk. So I actually put on not a lot of size, but I had a little bit of size as we were going into the close. I just added some more and added a little bit more. They all came out fine. I'm just saying this. I was a little bit concerned. What if they turn around and jump back up, which they had jumped back up, from this area, and it looked like, well, they might just throw themselves right back up at in the 30, 40s, and heck, I don't want to hold that thing over the weekend. But they did dip back, and that's been the risk. I think things will start to turn lower. If you look at the 30-minute, we are on the sell signal now. Okay, we did reach 127% extension, but this market was still adding. But I think a lot of other people were looking for potentially move below 30.48 that would kind of call it, if you want to look at it that way. Let me see what this level was here. And so I think those short-term longs, they got, I won't say they were knocked out, but they got tripped out at that point. So I think they're, and you can see here now we're in a sell mode. You can see here we flipped to the buy mode. We've been in the sell mode now. I don't really necessarily see that changing. And the only thing you could see if Trump would not appear that hard on China, then you could see a snapback. But then eventually I think that's going to be faded. And then, of course, like I said, we got a sell signal in the Dow futures, and they've been on a buy mode. Look at that. Since May 24th. They finally flipped, unlike other indices. That's what I'm saying is that it was Dow futures, the one that's been, leading the charge. You see, we finally gave up the ghost yesterday. And it was already giving you the telltale signs. Russell had already been weakening throughout the day. And of course, on the NASDAQ, as I mentioned, it had been the weaker sister all week long. We saw a rotation back into those stocks, and we made it all the way up to the 88%. And when we came up to these levels, that's what I was looking at. Where are we seeing some weaknesses? S&Ps were still keeping their bid, but they were paying attention to what was happening with YM. We did get the gold contract finally loaded up correctly. I think the August, I had it with the June for some reason, but August was just still sitting down here. We held that 1700 area pretty well, and we're just kind of dithering at this level. And then looking at July crude, we finally pared back a little bit, although S&Ps did not pay that much attention to it. Well, that's what we have for today. We'll see you in the chat room later on. Thanks for joining us here for the European crossover.